You may have heard of Injective protocol thanks to its native token INJ. It has been on an absolute tear since the beginning of last year, ending 2023 with a whopping 29 times gain. It has not only surpassed its 2021 all-time high, but also emerged as the best performing asset among the top 100 cryptocurrencies in 2023. Well, almost, as it was outperformed by a dog on Solana. So without further ado, let's get down to what all this buzz around Injective is all about. The project so far has raised $57 million over 5 rounds of funding from notable investors such as Binance Labs, Jump Crypto, Pantera Capital, and Mark Cuban. Besides that, Injective also launched its $150 million ecosystem initiative supported by influential players such as Pantera Capital, KuCoin Ventures, Jump Crypto, and Delphi Labs. This initiative is to bootstrap developers to create a diverse ecosystem on the protocol. Injective Labs co-founders are no slouch either. CEO Eric Chen from New York University and CTO Albert Chan, a Stanford graduate, joined hands to work on Injective for at least 2 years before they conducted their first major round of funding in 2020, which raised $2.6 million. So what is Injective? Well, Injective is a decentralized Cosmos-based Layer-1 blockchain. It focuses on powering DeFi applications. It uses Tendermint's proof-of-stake consensus mechanism, and because of that, it's able to achieve a blazingly fast block time of 0.8 seconds. Now, this is supposedly able to handle 10,000 transactions per second while keeping transaction fees under a penny. Injective also uses the Inter-Blockchain Communication Standard, or IBC, and IBC enables decentralized communication between independent blockchains. This allows for various cross-chain applications such as bridging tokens, deployment of cross-chain dApps, or Oracle data fees. And it does this while mitigating counterparty risk that comes with centralized bridges. As a result, Injective is highly interoperable with other blockchains like Cosmos, Solana, Polygon, as well as Ethereum after implementing an ERC20 token bridge. But the two main things that sets Injective apart from other Layer-1 blockchains are a decentralized on-chain order book and auto-executing smart contracts. At its core, Injective features a decentralized, MEV-resistant on-chain order book. So maximal extractable value is a prevalent issue in the blockchain space, usually associated with Ethereum. Now, to briefly explain, MEV refers to miners and validators taking advantage of pending transactions in a blockchain's mempool. They can do this by including, excluding, or reordering transactions, and this can lead to unfair trading conditions. Average blockchain users are then at risk of front-running and sandwich attacks. But Injective bypasses this by implementing an on-chain order book that uses frequent batch auction, or FBA. FBA is a novel order matching mechanism that promotes tighter spreads, eliminates front-running, and so improves liquidity provisioning. Because of this, it creates a more equitable trading environment. As the order book is built into the blockchain as a primitive, applications built on Injective can tap into the liquidity of a shared on-chain order book. And this resolves many problems faced by DEXs. One such is fragmented liquidity across various platforms, which causes market inefficiencies and poor exchange rates. The order book is also flexible, supporting different types of trading markets like spot, futures, and options. Injective's unique implementation of Cosmos's COSM-WASM smart contract framework enables auto-executing smart contracts. Now, without getting into the weeds with its technicalities, auto-executing smart contracts allow smart contract functions to be triggered automatically at every block without external intermediaries such as users or external oracles. This opens up the possibilities for new use cases for smart contracts, such as Black Panther's automated trading strategies that are executed entirely on-chain. So, considering Injective's technology and the 150 million ecosystem initiative, how is their ecosystem shaping up? Well, according to DeFi Llama, TVL on Injective has climbed up to 81 million at the time of shooting, with 14 dApps making up for this TVL. Almost 90% of this TVL is from 3 dApps: Dojo Swap, an AMM DEX, Helix, an order book DEX developed by Injective Labs, and Black Panther, an automated yield farming protocol. As promising as Injective seems to be, its current 81 million TVL ultimately pales in comparison with that of other leading DEXs, such as DYDX, which currently has a TVL of 375 million, or Solana's TVL of 4.7 billion, comprising over 100 active dApps. In the recent couple of months, daily trading volume ranged from 3 to 43 million, compared to chains like Solana, Arbitrum, or DYDX, which are easily doing several hundred million up to 2 billion of volume per day. Evidently, Injective still has a lot of ground to cover in order to be the leading DeFi-focused layer 1 and has a lot of competition. Now, let's take a look at the token powering Injective, INJ. So at Genesis, INJ supply starts at 100 million INJ with an inflation targeted at 7% that tapers over time to 2%. INJ acts as the network's utility token, used to pay for fees, staking for network security, and is also used for on-chain governance for things like protocol upgrades and new market listings on exchanges. Injective is also offering its token as an incentive for early users participating in trades on the protocol. On top of that, users stand the chance to earn additional INJ based on how profitable their trades are. One distinct feature of INJ as a utility token is capturing revenue generated from any DEXs operating on Injective, which collect an exchange or swap fee dominated in INJ for every trade executed. For instance, 0.01% to 0.02% on Helix. There are 2 ways for anyone to capture this revenue targeted at developers. The first way is by hosting an exchange relayer node. So this essentially creates a new exchange that routes trades into the Injective's shared order book to cater to a specific locale or niche in the market. This is meant to incentivize different exchanges to compete in order to provide new and better user experiences for users, expanding the ecosystem's reach by serving more DeFi users as a result. As an exchange relayer, one could expect to earn a large share of the exchange fees that goes through their application at 40%. The second way to capture the remaining 60% of the exchange revenue is for any INJ holder to participate in exchange fee auctions, where the 60% of revenue accrued by Injective dApps is used to buy back and burn INJ tokens on a monthly basis. Basically, collected fees are auctioned to the public every month, where they can bid INJ tokens to buy the aggregated INJ exchange fees, essentially allowing people to buy INJ at a discount. The proceeds of the auction will then be burned. This burning mechanism is a contributor in INJ's potential deflationary tokenomics. INJ's deflationary potential is heavily tied to the traffic on exchanges on Injective through the aforementioned exchange fee auctions. While Injective claims that this will produce one of the largest burn ratios in the crypto space, INJ will still need sustained demand for Injective's ecosystem in order to achieve and maintain deflation. This alone doesn't guarantee a deflationary token, but it would have a decent chance of getting there if the network continues to grow over time. As for INJ's token allocation, fundraising from seed, Binance Launchpad, and private sales account for 32% of the token supply. 20% is allocated to the team, and the rest, 46%, goes towards ecosystem growth. It's worth noting that all INJ tokens are unlocked and in circulation, with the last 4% of vested INJ tokens unlocked recently on January 21st. Overall, Injective has a solid core team, decent backing from key players, a product with a proven use case, a modest but growing ecosystem, and robust tokenomics. Now, while it looks poised to be one of the more promising projects within the space, it it is still important to keep in mind the hype surrounding the project, and remember that the market can turn anytime. So, what are your thoughts on Injective? Do you think it will emerge as a top trading and DeFi-focused L1, or will it be its other competitors? Let us know down in the comments. If you've been finding yourself getting lost tracking all the crypto you own, check out our picks on the best portfolio trackers right here.